Welcome to PerfPod, your go-to podcast for everything related to performance management. Whether you're a student or a seasoned professional, you'll find valuable insights and updates here. PerfPod episodes will be short, snappy, and are particularly targeted at ACCA students studying for performance management or advanced performance management exams. They'll include technical content, exam techniques, and real-world applications, giving you the best chance to pass these two tricky exams. I'm your host, Richard Guyver, also known as the Dentist Accountant. Today we're staying on the risk and uncertainty topic area, and we're diving into two topics, sensitivity analysis and simulation. Now these can appear in PM and APM and also in AFM. But there's different depths and different levels which they'd be tested in each of those. So both sensitivity analysis and simulation are used in situations where we're faced with uncertainty. If we start with sensitivity analysis is often thought of as a what-if analysis. So if we look at the approach in PM, it's likely you're comfortable accepting that there's many variables which could affect the outcome of a project. So for example, inflation, sales volumes, supplier costs, selling price. And the decision on whether to proceed or not with a project or an initiative is based on assumptions around those key factors. What sensitivity analysis does is it helps us identify how much one of those key factors would need to change in order to lead to a different decision. And it's presented as a percentage of the original figure. So for example, if we did a project appraisal and the sales price was $1,000, and on that basis the project was accepted. But if we did a calculation and worked out that if the sales price dropped by $200 to $800, then it wouldn't be accepted. And the sensitivity therefore is 20%. So it's the 200, the change from 1,000 to 800, divided by 1,000, and that leads to 20%. So the sensitivity of sales price in this scenario is 20%. And what sensitivity analysis allows us to do is identify crucial factors which we can then monitor. And sometimes we're asked to find a critical factor, which is the most important crucial factor. And the way to find the critical factor is you calculate the sensitivities of the variables, and whichever has the lowest percentage is the critical factor. And that's because the one with the lowest percentage would require the least change proportionally from its initial assumption in order to change our decision on whether to go ahead with a project or not. Now there are limitations with sensitivity analysis, two main ones. First is it's based on estimates and assumptions, and where do they come from? Often they're very difficult to accurately predict things. For example, inflation 2 years ago would have been very difficult to predict. So are those assumptions reliable? And the second limitation is a really important one. You can only change one variable at any one time. So if I had a look there how sensitivity analysis might turn up in performance management, it's often different or could be different in APM and AFM, and that's because in financial management you would have been introduced to net present value. So if you've done FM, that should ring a bell. If you haven't done it, don't worry, it will be something you'll be looking at later. But because that's part of the FM syllabus, that's considered brought forward knowledge for the professional exams. So in APM and AFM, it's assumed you understand and know about net present value. So in PM, you would say that the sensitivity analysis would lead to a change in decision on whether to proceed with a project or not. In APM and AFM, you're more likely to say when the net present value is less than zero, that's the trigger point for that decision change. And one thing to be very aware of is how any of those variables that you could change cascades through any subsequent calculation. So for example, if we were to change the retail price of a product, that would affect our pre-tax profit, which affects taxation. It's also be tax allowable depreciation, which would then apply before the taxation is applied. So the spreadsheet function is really useful, particularly as these calculations can get more and more complicated as you go into the professional exams. So definitely practice carrying these out using the spreadsheet function. And we might be straying a little into AFM here, but it's all good practice. learning to use the functions, because they definitely will speed up your time in the exam. So that's sensitivity analysis. The other thing we're going to talk about is simulation. Now, we mentioned that one of the key limitations of the sensitivity analysis is you can only change one variable at a time. An example could be if we were to decrease the price of an item and we looked at the impact on the project overall. What we haven't taken into account is that by decreasing the price, we might actually increase sales volume. And scenario testing allows us to vary multiple assumptions and then run a scenario based on those changes. So for example, we can change sales price, fixed costs, variable costs, inflation, foreign exchange rates, market size, etc. So when setting up a simulation, we plug in all of those variables and the probability of each of them occurring into a computer program, which then runs multiple scenarios using that probability information that we've put in. And it builds up a picture which is called a probability diagram, and it will show the profit or loss along the x-axis and the frequency of each of those profits or losses on the y-axis. And you might end up with one project which always makes a profit, but the highest profit can make is relatively low. And you might have another project which has a higher profit that it can make, but can also make a loss. And this allows you to compare those and make a decision based on which project you want to go for. It's important to note you'll never be asked to design or run in any of the ACCA exams a simulation, but it's important to understand what it is and how it works. So today we've looked at sensitivity testing and simulations, and on the next podcast we've been sticking with risk and uncertainty, so the final one of those is next, and we're going to look at the value of information. So thank you very much for tuning into PerfPod. I hope you found this episode informative. I'd love to receive any feedback in the comments, and remember, if you do have any topics you want recorded in future podcasts, please say so in the comments, and as always, do share this with colleagues who you think might find this useful. Until next time, this is PerfPod signing off.